to other matters, as Nigeria becomes one of the latest to be accepted as a shareholder of the European Bank for Reconstruction and Development, there are questions on how this fits into the current plan by countries in Africa to become less dependent on foreign aid and financing. Our correspondent sat for a chat with the Managing Director, Sub-Saharan Africa European Bank for Reconstruction and Development, Dr. Aike Amgat. Let's take a listen.
At a time when Africa is seeking independence, especially financially, getting funding from outside the continent, how come EBRD is now interested in Africa?
Actually, luckily, we were interested in Africa before President Trump, and I think it was really triggered. We started 12 years ago in North Africa, and we really thought we have something to bring to these countries in supporting the private sector. And so now we still think we have a lot of extra capital, and then there was the debate started, sort of what's next, and we saw a lot of companies looking south of the Sahara, and we thought we want to be part of that story and really support economic growth through private sector investments. And so our shareholders decided we should expand to sub-Saharan Africa, and there were 6 initial countries, and they now are starting to become shareholders of the EBRD, and the latest one, our 77th shareholder, is Nigeria.
So Nigeria is now a shareholder, Cote d'Ivoire, and all the sub-Saharan African countries. What are the benefits, really, of being a shareholder of the bank?
I think the benefits are that you now have access to our whole capital base, so you can leverage really debt, equity investments into the Nigerian companies, but also projects in the infrastructure space, in the agribusiness space, across the whole economy now can benefit from financing from EBRD. But also, of course, we want to support trade, so we will guarantee trade finance programs for Nigerian banks who want to issue letters of credit for Nigerian exporters and importers. Hopefully we'll support Nigerian SMEs across the country, and sort of make linkages to existing clients of the EBRD in other markets, that we will promote Nigeria as an investment destination and hopefully accompany companies to invest in Nigeria.
So, being a shareholder is one thing, but how much influence or voice can countries like Nigeria have when it comes to the decision-making process as EBRD?
I think it was great to have the Minister of Finance of Nigeria at our global annual meeting just a few weeks ago, because this was the moment that EBRD decided on the next 5-year strategy. And there, I think actually we have a number of strategic decisions that have 2 majorities, where you need the number of countries and you need the shareholding. So I think, every country counts. And then I think it was really great to see the minister spoke up in our General Assembly and really made a few points around sort of a number of the key topics like governance, like green transition, and how he really sees Nigeria benefiting and coming in on digital. So I think, yes, I think you can make a point. Every single investment in Nigeria needs to be supported by the Nigerian board representation. So I believe that each individual country can make a difference, and will also make a difference, I hope, because we're hiring lots of Nigerians now, both in Lagos, but also in headquarters and everywhere, because the moment you become a shareholder, everyone with a Nigerian passport can start working for the EBRD. So we just advertised our first 2 positions in Lagos. One banking analyst, we got 1,000 applications. It was crazy. So I really believe also you benefit in many, many ways from being a shareholder and being also then a country where EBRD invests.
So one of the conversations going on in Africa at this time is the cost of funding, especially because of the rating. So the rating companies have junk or low ratings, and so the cost of funding is high. So at what cost is Africa going to access this capital from the EBRD?
No, I think, of course, we are market-driven. So in particular, when we invest in the private sector, we really look at, of course, the market conditions. But we also, because we are really local, we really want to take the real risk, not the perceived risk of a project. So that's why we really invest also in understanding all the details of a local project so that we really just price the real risk and not the perceived risk, which of course on the continent sometimes are different things. So we will look at market pricing, but we also are patient investors. So we stay long term, we have more patience in terms of them, so we're not in just for short-term financing. And we also mobilize others, so we mobilize green climate funds, we mobilize donors to blend if needed, to make the loans more affordable to both the companies, but also, of course, to the Nigerian government.
In all that you're offering, are there intentional policies and plans to get Africa independent financially, talking about the capitals, or even with skills and human resources?
Can attract a lot of the Nigerian pension funds into long-term investments. And so we also help companies in the stage pre-listing, so to really encourage companies to also utilize capital markets as a way of accessing sustainable long-term finance. So I think that's sort of an area, a big focus is on local capital markets. And maybe another area is also on local currency financing. So we really want to finance in Naira. So we're having really great discussions with the central bank governor. I saw him in DC, and I saw him in Abuja not so long ago, and we're really discussing how can we make sure that we have competitive Naira so that if we finance a Nigerian business that is not an exporter, that they don't take additional currency risk. So I think that's capital markets and local currency really important.
Oh, interesting that you have the local currency financing. How does that work?
In Egypt, we, for example, swap with the local bank. In Jordan, we swap with the central bank. In some countries, we issue local currency instruments. So in Morocco, we recently launched a green bond with the rail company. So we have different ways of accessing local currency that we then on-lend to businesses in the country so that they don't face FX risks that they can't themselves mitigate. So I think that's a huge important aspect. I have to say it doesn't always work. So in some countries it's really difficult to be competitive, and then we get very expensive local currency that nobody wants. So I think we really need to, but in most of the markets we've been really successful in attracting swaps that work really for the local business. And I think that's a really important one. I think we learned our lessons 20, 30 years ago in Europe, when also there was a lot of devaluation going on, and I think that companies suffered from having too much euro debt. So it doesn't always work, but it's a huge ambition for us to increase our local currency financing.